Gold is no longer just grandma's investment. It's now the second most held asset by central banks, right behind the US dollar. Hi, I'm Megha, your regulatory decoder at HyperVerge, and today we're unpacking two massive gold stories that could reshape India's financial future. The first one is this. Gold is no longer just grandma's investment. It's now the second most held asset by central banks, right behind the US dollar. Why? Because the dollar is starting to feel risky. From trade wars to sanctions, countries are looking for safer bets. And gold? No counterparty risk, no politics, always in demand. Reserve assets are assets held by central banks in significant quantities as part of their foreign exchange reserves. The US dollar has been the top reserve currency since the 1944 Bretton Woods Agreement, and the euro has been a consistent second since its introduction in 1999. But now, gold has overtaken the euro, and this is not a fluke. Over-dependence on the US dollar has made governments across the world susceptible to geopolitical and sanctions risks. In order to mitigate this, central banks, especially in emerging markets, are trying to reduce their reliance on the US dollar. Ongoing global tensions, such as wars, trade friction, and market volatility, have pushed countries further to seek safe haven assets. Gold is universally accepted and doesn't carry counterparty risk, so it is quickly becoming a preferred reserve during uncertainty. According to the World Gold Council, central banks bought over 1,000 tons of gold in 2022 alone. India's own gold reserves is estimated to be around 850 tons, but more impressively, India is the largest consumer of gold globally, with an astounding 25% of the entire global demand. Unfortunately, gold is historically underleveraged in the Indian financial system. The household gold stock in India is estimated at over 25,000 tons, valued at over $2.4 trillion, which is mostly idle. Indians' cultural preference for physical gold and jewelry, informal market structures, and regulatory friction have kept thousands of tons of gold as idle capital. Which brings us to our second story. RBI's new lending directions have introduced new rules for lending against gold. So on one hand, we have gold becoming an important strategic asset across the world, and on the other hand, we have the RBI regulating it further. How are these connected? RBI, in its new lending directives, has made significant changes to lending against gold. First, there's a unified framework for all lenders, banks, NBFCs, and co-op banks alike. Loan-to-value limits are now stricter. For small loans, no income proof is needed, and you can even self-declare gold ownership. Only hallmark jewelry and bank-issued coins are allowed, tested in your presence with full documentation. Most importantly, borrowers are better protected. They now get a clear loan agreement, and lenders must return their gold within 7 days or pay 5,000 per day. These rules take effect on April 1st, 2026. They promise faster access, safer handling, and better transparency. But here's the big question. Is the RBI quietly positioning India to play a more active role in the gold-backed global financial system, or is it too little for the scale? Compared to countries like China, Turkey, or Russia, India's formal gold integration is still minimal, but the potential is massive. The disconnect between potential and policy is what the RBI is trying to address. If implemented well, gold-backed lending can reduce reliance on unsecured high-interest credit, bring millions of informal borrowers, especially rural families and women entrepreneurs, into the formal economy, and give lenders physical collateral, reducing the credit risk. They can unlock gold as formal traceable capital, which can help establish gold as a systematically important asset. Imagine gold loans that fuel micro-enterprises, farm inputs, or working capital for rural businesses without requiring income tax returns or CIBIL scores. But there's a missing piece. If we're serious about unlocking India's gold power, policy is only the first step. We need standardized valuation and secure storage, blockchain-based tracking, digital gold lending platforms, even sovereign-backed gold tokens. And most of all, we need to bridge the trust gap. Gold is no longer just a safe haven, it's becoming a strategic currency alternative. India has the reserves, the demand, the cultural trust. But do we have the roadmap? The RBI's new framework is a strong first step. Now, we need to go further with innovation, policy, and ambition. If you like this video, follow us for more insightful financial and regulatory analysis.